Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Friday, August 11th, and then we'll see how things look for Monday, August 14th. We had a pretty sleepy day. I call it almost comatose. We really didn't see much change. Unfortunately, with some of the moving averages that we've been following with the NASDAQ 100, and the FANG index, we're dropping below those averages. So our next question is, are we going to fall onto the 50-day moving average for the S&P 500? First of all, please be aware that I am doing an online course. Some of the areas that I plan to cover in this course are strategies, different things about support and resistance. I will also be presenting my approach to technical analysis. One thing I want to ask is, what times are good for you? I have some feedback on that already. I would kind of like to do it during market hours. That seems to work out best for me, but it may not work out best for you. If that's not good, I will record the sessions and you can watch them later. Also, I want to know, would you like one longer class or maybe multiple shorter classes? If you have some feedback on that, I would love to hear it. Let's go back and talk about what happened. The PPI came in stronger than expected, and that spooked the markets a little bit. Interest rates started going back up, and that pushed stock prices down. So interest rates are still continuing to climb, and that's becoming a bit concerning to the market. The S&P is still below support, and it's coming down to its 50-day moving average, so we'll be watching that. The S&P is also under 4,500. On a short-term basis, we have the Stochk RSI, the Williams Percent R, the CCI 14, which is back on the list now, and the CCI 20, as well as the stochastics, all giving us extreme negative readings. You could also suggest that the market is becoming oversold on a short-term basis. The dollar was up and interest rates were also up. Both of these together put some pressure on stocks. The 30 to the 5, which had gone back to being normal, it's now back to being inverted again, as well as all of the other yield curves that we follow. Sentiment is still positive though. It ticked down from 67, where we closed at 66. Our trend is negative, and we're seeing a little bit of divergence here. The short-term trend is more negative. In fact, we're actually getting to the point where we're not trending any longer. Our intermediate-term trend, we are declining, but the green line is trying to come up on top. Given another day or two of this sideways action, and we could go into a trendless environment. The economic reports that came out, the PPI came in, and it was up 0.3%. They expected it to be up 0.2%. Last time it came in unchanged. The core PPI also came in up 0.3%. They expected 0.2%. The last time they revised this number down to being down 0.1%. Consumer sentiment came in at 71.2. They expected 70.9. Last time we had the report, it was at 71.6. Here's the intraday chart where we did gap lower. We came down almost to S1 but didn't quite reach that level. We shot up out of that. We actually went positive for a little while. Then we started falling back, and we spent most of the day below the unchanged level. Tried to go positive near the end of the day and then dropped off a little bit, and we were virtually unchanged on the day. Here's the intraday growth versus value ratio, where we spent time underwater with this whole ratio, so we didn't see a lot of follow-through strength there. We're also keeping an eye on the 5-period simple moving average of the equity put call ratio. This continues to advance, and that's negative for the market. Here's the condition of our trend, where we're declining with the ADX. It's below its moving average. The green line is on top, but it's declining. The red line is on bottom, but it is advancing. If we continue to fall, we might drop below 20 here pretty soon. We're seeing more of that in our short-term ADX, where we are declining, and the ADX itself has now dropped below 20. It's a little hard to see here, but the red line is trying to go above the green line. So in the short term, we're going into a trendless environment. On the daily chart, we're coming down to the 50-period moving average. If we break below that, that's going to be a concern to us. We've already fallen below it with the NASDAQ 100, and the FANG index. We're seeing if the S&P 500 might be able to offer more support. On the bottom, we can see where volume is dropping to well below average. Looking at our moving average tree, again, we're falling below the 20-period moving average. We're coming down to the 50-period moving averages. We're also keeping an eye on the Chaikin money flow. This tries to measure what is the smart money doing. It started to decline before we saw prices going down, and it's still continuing to decline even though it ticked up a little bit on Friday. The Nasdaq did drop down below its 50-period moving average. That's a bit of a concern. And we're also seeing the Nasdaq 100 dropping below its 50-period moving average, which is a concern. We're wondering, are the small caps going to come down and test their 50-day moving average? The mid caps also, will they come down and test their 50-period moving average? We're still above that level. Looking at our longer-term chart, we're now coming below this resistance line for the S&P 500 weekly chart. We're seeing pretty much that same thing with the Nasdaq 100 weekly chart. We're also keeping an eye on this, and this is longer term. This is a weekly chart of the Nasdaq 100 to Dow ratio. When we get to a really high level and start to go down, that could be quite negative for the market. At least that's what's happened in the past. So what's our outlook for Monday? We will have more earnings reports that will be released, but most of the companies for the S&P 500 have already reported. The technicals are negative and we're below support. We're wondering, we're heading down to the 50-period moving average right now. Is that going to offer some kind of support? The economic reports coming out, we won't get any on Monday. The geopolitical events, we're keeping an eye on all of those, but it's still about inflation and interest rates as far as the stock market is concerned. Here's the new calendar for the upcoming week. Please note that on Monday and Friday, we won't be getting any reports. We will be getting retail sales on Tuesday. We'll be getting industrial production and capacity utilization on Wednesday. We'll get the LEI on Thursday. Looking at the Stock Traders Almanac statistics, we're positive for the Dow, where we're neutral to positive with the S&P and Nasdaq. Here's some new charts posted by Jeffrey Hirsch, where we're seeing in a pre-election cycle from 1949 to 2022, those are the dotted lines going forward. We follow the green line here, just looking at 2023, where historically we might see a bit of a recovery if we stick to historical norms. On a shorter term basis, we're keeping an eye on the Nasdaq. Have we finally bottomed out? Will we get some kind of a bounce from here? Then looking at the pre-election year for the S&P 500 and the aggregate cycle, the purple line is where the S&P is. The green line is what we follow for the S&P. In the month of August, we do tend to see some historical bouncing from here. We're wondering if that's going to happen this time. We will be on the 10th trading day of the month, where we see a little bit of weakness or strength, depending on what index you look at with the dash lines. We see a little bit more strength when we take all of the years together. So our scenarios, we're leaning towards the down scenario right now because our technicals are negative, we're below support, and we're approaching the 50-period moving average. We're not going with the uptrend for right now. Our charts just don't confirm that. We want to wait and see if our charts prove to us that the market's going to be going back up. We might be heading more towards the sideways trend. Our short-term ADX has already gone into a non-trending environment. The longer-term ADX chart, we're still waiting to see if that's going to fall down below 20. The warning signs, we did see a convergence of the short-term bearish signals, and that's what has been putting pressure on the market. Longer-term trend signals may be signaling a top. So far, we're still below both of those points for the Nasdaq 100 as well as the S&P 500. Seasonally and historically, we're in a weak month right now when you take all of August together, but we could be entering a positive time, especially in a pre-election year. The S&P 500 oscillators are negative, as well as the Nasdaq 100 oscillator that we've been watching. The VIX is still showing complacency, even though it goes up on down days, but it's still showing that there's not a lot of fear. We're also keeping an eye on our accumulation and distribution chart, as well as the Chaikin money flow. They are showing weakness, and this tries to measure what the smart money is doing. Small caps and mid caps close below their secondary support. That's what I'm calling the pivot levels. They're coming down, but they're still above their moving averages. They're not falling below major support like what we've seen now in the Nasdaq 100 and the Nasdaq. The cumulative new highs and new lows for the Nasdaq are showing weakness. We're still above that 3-month yield. If we go back to 2007, it's still going up. If we start to roll over and come down, we're wondering, is that giving us a warning sign? S&P 500 growth is weakening, but it's still in an uptrend. The weekly pivot point that we hit about 2 weeks ago, that is where everything topped out, and we've been coming down since that time. The parabolic SAR is negative and the vortex is negative. Then earnings are released on a case-by-case basis. Also on the positive side, we do have seasonality and setups that are in the background. The daily special K chart continues to be positive. The equity put call ratio, even though it's turning up slightly, is still positive for the market. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture, but we're seeing that starting to weaken. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, this should be on the negative slide, they're dropping below their 50-period moving averages. The staples to S&P 500 ratio is declining. The Russell and the small cap index as well as the mid caps have generated recent golden crosses. Small and mid cap growth continues to be positive, and the financial sector has generated a recent golden cross. So our conclusion, we're negative and below support, and we're watching that 50-period simple moving average for the S&P 500. In the short term, we're negative and we're slightly oversold. We could become even more oversold, but we could also get a bounce based on what the charts are saying right now as well. In the intermediate term, we continue to be negative, and in the long term, we continue to be positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length video. Have a great weekend, and I will talk to you in the next video.